Traders, how you doing? Hope you had a good Easter. Quick video, as I promised on my Instagram, about today's trading. So, firstly, we're going to get into some analysis very quickly. I'll try and make it short. I always say that, but it will be short. Today, if you follow my Instagram, you would have seen $1,000 on my live account on E-mini S&Ps. Really enjoying it at the moment, not trading London Open as I talked about on my exposed video. Really enjoying it, right? Getting a nice break, dealing with some other things, and then being very fresh for the New York session. I talk a little bit about it on a different video, but before I get stuck into it, literally 2 minutes of your time, just to really say, really humbled by the comments people left me on my G7FX exposed video. Let's not beat around the bush. There's a lot of donuts out there, right? As I said on the video, it's true. I'm not gonna hide it. Utter donuts, right? There's nothing better to do with their time, but whatever. I really appreciate the support. It means a lot to me. It keeps me motivated to keep going. Don't necessarily need to do this, but I enjoy it. I love helping people because of all the garbage out there, right? All those squiggly line crap. I love helping people, steering them towards the right type of education, and seeing those comments really motivates me to carry on. Having said that, I've also taken the suggestions on board, right? Which was that people want to see more of analysis type stuff, and they get it now. That I am who I say I am is clearly obvious now, right? It's in black and white. Whatever the only thing left for these donuts to say really is that maybe I don't know. This is a hologram right now. This ain't envy. It's a hologram, but there's really nothing else to say, right? So I'm not gonna. Don't worry. I'm not gonna do any more of those type of videos. I had to do it once. I'm sure you appreciate why, to just get it out of the way. I've taken the feedback on board, which is, look, envy. We want to see a lot more of your analysis. We get it. We know you're an audited trader. We know that you're pretty much one of the most solid guys out there. You don't need to keep saying it. So I've taken that on board now. I'm going to focus fully on analysis type videos. Don't know how many I'll do, but we'll start anyway. This week, I think it was this week or last week, I did one on crude oil. So check that out. Today I'm going to cover E-mini, which I've taken $1,000 out of the market on. So it's a bullish play today. Obviously, as always, going to show you my live account. Almost feel embarrassed to do any of these type of videos without showing you that I'm kind of practicing what I preach. Very important to me. So obviously I'll show you the live account. Ignored news today. Big thing at the moment with the S&P and the E-minis. Always wondered why they call them the minis, right? They're definitely not mini. $12.50 a contract. As you'll see, I think I did 6 or 7 contracts today, so almost about $80 a tick. So definitely not mini, but I've always wondered why they call them minis. But look, the point is they've been in the news a lot recently because obviously the S&P is continuously making new highs. There's a lot of news out there saying it's very much supported by the Fed's balance sheet, and it's artificial. Complete garbage, right? Load of garbage, right? I'm not holding these positions for 6 months. I'm holding them for one day. Who cares? This is why I tell people, to a large extent, news is irrelevant. It's very random on an intraday basis. On a long-term basis, very important. Definitely drives the market. Not going to argue with anyone because I know a lot of you will be thinking, hang on, MP, the news does drive the market, and I agree. But on an intraday basis, it's very dangerous. So we'll discuss that very briefly. Obviously, VWAP, profile, footprint, and then I don't know. I wanted to discuss something about low probability, high probability, because I did. I also took a little bit out of crude oil today, $100, but it wasn't the greatest of entry. So if I get a chance, we'll talk about it. But otherwise, I'll definitely talk about it in my next video. But let's see how we get on. Main thing is, again, if you haven't checked out the exposed video, check it out. I really appreciate the comments. Thank you very much. Yeah, don't worry. The sort of chapter is closed now. That's it. We're going to focus purely on institutional analysis, and that'll be basically what 100% focuses on now. So let's get on the charts. Okay, everyone, here we are on the E-mini chart. So as always, right, let me just turn on my fills there. You can see the just turn those on, the order fills for today there, and open up my chart window. Which one is it? Trade window, I think. There we go. All right, guys, $987.50 live account. Right, one for the donuts there. But no, in all seriousness, so yeah, you can see it's all kosher. So that's important. So you know, I'm not just talking out my backside here, right? This is serious stuff. So anyway, it is what it is. Got that out of the way. Now the point is that you can kind of use this stuff interchangeably. You know, I've talked about market profile a lot. You can see the 3 days there, the last 3 days. You can see the market. Also, from a price basis. So whilst market profile is very, very useful, I think also visually you can kind of see what the market's been doing. It's been very balanced, right? So we've talked a lot about VWAP. You know, on an intraday basis, the market is very balanced, but also on a multi-day basis, the market is very balanced, right? So when we're inside these balances, you know, the market's going to be very rotational. Now, I've been trading crude oil. That's why you can see very transparent, right? You can see there's no feels here, right? It's only when we broke out today of this main balance area and went almost imbalanced on a multi-day basis, okay, that the market came down, okay. Now what happens is, I think a lot of retail traders and so on and so forth, they get very excited, right? They're looking at things on only an intraday basis, okay, and they'll be getting very excited and thinking, oh, we're at the highs, you know, we have to sell off, it's very, very high, you know, 4,090 in terms of the PS. I need to be selling, right? And it doesn't matter if it's E-mini S&P or whether it's currencies or the pound or whatever, right? If it's pound dollar and it's been rallying for 5 days, people get so into this almost perma fading mode. It's very much like, you know, oh, it can't go up anymore, right? It can't. And this is what I wanted to just bring in the news. You know, you've got to realize the stuff in the news is, it's very broad based. News takes time to play itself out. On an intraday basis, be realistic. You've got to think how much impact is, you know, some underlying economic fundamentals such as a shift in GDP, company profits, companies balance sheet health, these type of things. How much impact realistically are going to have in one afternoon? Nothing, right? It's just more about positioning when you're intraday trading. So from a positioning perspective, I obviously had this balance in mind. Now, whether you use, I think it's better that you use the market profile, because obviously on the market profile, you can see it, right? It's so clear, it's crystal clear, okay? Even my grandma could see it, and actually I'm exaggerating. Maybe my grandmother couldn't see it, but you know my point. It's fairly simple. You can see the 3 days there. You can see we broke out of the range, we came back to it. So kind of line in the sand is in that region. Very simple, right? No indicators, no nothing needed for that. We came back to that region, and that's where I jumped onto the order flow. I started looking at order flow. You know, what other buyers or sellers thinking at this stage? Do they agree with my overall opinion that the market is just pulling back, right? It's just pulling back. We've kind of been going sideways and then we've broken out. Market's just pulling back. Does everyone agree with me? Or does everyone think, nah, Envy's talking rubbish? Let's have a look at the footprint. Give me a second. I'm just going to bring up the footprint. Okay, guys, so I just loaded up the footprint. Just took me a second to just fire it up, and there you go. You can see all my entries there. Full size E-mini contracts that I entered. So I notice a lot of people talk about footprints and things, and they're very they've got tunnel vision. They're always thinking about the footprint from a what's the footprint doing without looking at everything else. But you see here, we were looking at the broader picture. So I know there's a lot going on, but you've got to think about what's been going on the last few days, right? Kind of what's the market been trying to achieve? And it's been trying to achieve higher prices. So on the footprint, essentially, it's a very microscopic view of the area in question. You've got to be looking, covering all bases, right? Trading isn't easy. You've got to have the kind of have this broad idea of what you think the market's trying to achieve. Clearly, I've shown you the market's trying to achieve higher prices in a very slow manner. You've also got to be looking kind of intraday, what's kind of like, I don't necessarily like the word price action, but I guess you could call it price action. What's the market doing on an intraday basis? And we can see that here. So on an intraday basis, the market is fairly rotational, right? Doesn't mean it's necessarily balanced overall. Obviously, on an intraday basis, it's fairly balanced, but on a broader term perspective, we know it's trying to achieve higher prices, essentially. So let me show you this area in question on the footprint. Right, so we've got it here. Okay, so you can see that same area, right? This area here is this area here. Okay, you can see why just looking at a plain candlestick it is not going to get you anywhere. Don't know why people follow half the garbage I see out there. It's only half the picture. You've got to know what are sellers trying to, or buyers trying to achieve at this point. Do you remember we said we saw it break out of here? At that point where I'm actually interested in buying the market, what are sellers doing, right? That's when I come over here and I start to have a look. And let's have a look together. So we can very much see, if we go slightly further back, don't forget this whole area here is just a very short period of time. So maybe around 20 minutes, sold zone. That was the first attempt to lower. This is the second attempt lower. First attempt to lower was actually on positive volume, right? Big clue that, hang on, right? Very positive volume, this first push down. And I know I keep changing, but it's important you realize where exactly the market was at that point. It was here. Okay, this was the second push lower. So keep that in mind, because I'm not going to keep switching back and forward. But if we go back again, okay, so remember what I just pointed out on that price chart. First push, second push, okay. First push, very positive volume. Second push, look at it, minus 3,200. Might not mean anything to you right now, but when you watch it a lot, you'll start to know kind of what delta is prevalent at this moment in time. Then comes the entries. Okay, as the buyers step in, pretty straightforward. Buying steps in, these sellers start to get very nervous, and the market then pushes higher. Really straightforward in the end, but takes time to play out, takes a lot of experience of watching. So yeah, pretty straightforward trade there. Hopefully that was useful for you guys. Let's have a quick look at crude oil. All right, so this is my crude oil. You can see here 110 today, really peanuts. And actually I was quite lucky, got away with it there just because I started to enter in this area, very close to the VWAP. So I just wanted to talk about low probability and high probability. I see this described in many, I don't want to say retail, but generally people talking about trading, high probability, low probability, talking about risk reward. Complete garbage. Okay, that is not low or high probability. Low or high probability is talking about things from a distribution perspective. So you know, where you've got mean or the mu, where kind of a very high concentration of occurrences happen, and that is there, right? So to enter in that area is very low probability, because what you're saying is you want to know the kind of probability of some sort of reversion, okay? But from here, the probability of a reversion, very, very high. The probability of a reversion from here is so low because the gap to the point where the market's going to revert to, very, very small, right? So really you've got not much to play with in that area. So very poor risk reward there. I did recognize it, to be honest, quite quickly. I had a bias for the market to move higher, which it did. But as soon as the market was in this area, I must admit, I did give it a little bit of room to breathe because expected it to stay rotational. But as soon as I realized, I got out of the trade. I didn't really stay too stubborn and so on and so forth. But I just wanted to put that in there just to show you that I am human. Obviously, mistakes, I do make them. I think I was just rushing a little bit. Probably wasn't focusing so much. I was actually looking more at the broader range, which is, so I'll show you what I was looking at. It's this area. Yeah, okay, that's what I was looking at. Don't think I really had my eye on the VWAP or the mean too much. So yeah, got a little bit racy, but in terms of contracts, it was quite light. Only a couple contracts there, and then one more there. And then as the market started going down in terms of order flow, I'm not going to show it in terms of the footprint, but it became clear to me that as we started racing back up, probably wasn't supportive of what I was looking for. So, and I recognized my mistake, so I got out and then switched it off, went over to the ES and recognized that this type of rotational play was much more prevalent in the ES today. So then I focused on the ES. So yeah, you can actually see here very openly, no more trading in crude today. You can see that if I just push it forward. Okay, so no more trading in crude. That was it. And I think you can see one of my fills there from yesterday. So yeah, pretty straightforward, guys. Hopefully that was helpful. I will try to do some more analysis videos. The energy's gone today. You can probably tell it's been a long day. Energy's very low. Just wanted to get something out there to be quite helpful, but we'll try and do something a little bit more comprehensive on the next video or the video after. Have a great week.